This week's trades, market movers, and technical levels that count, wrapped up with clarity and precision. This is Weekly Wrap Up with Verified Investing.
Hey everybody, welcome to the Weekly Wrap Up. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. What an interesting day. Now, if you look at the kind of the data where we closed the day, it looks kind of calm. Markets didn't do a whole lot. They gained a little bit of traction, but there was some crazy action early in the morning. And again, this is something we've seen over and over again. Insider information from the government in terms of economic data leaking out to select individuals, and ultimately they take advantage. So I want to show you this, folks. We're going to start with the S&P 500 on the 10-minute chart. Now, this chart looks very normal, right? Here's where the markets opened on the 10-minute chart. We kind of went up a little bit, rolled over, came down, and then did nothing into the end of the day. That looks very normal. Now, if we flip over to the ES futures chart, which shows pre-market action, look at this. At 8:50 in the morning, all of a sudden the markets caught a big bid. 10 minutes, 20 minutes, 30 minutes, 40 minutes, 50 minutes, 60 minutes, 70 minutes, 80 minutes. That was how long it took until the PCE was released at 10 a.m. And look at the buying that was taking place. Now, you and I didn't have the numbers, but clearly someone out there got these numbers, or many individuals got these numbers, and they were buying in a frenzy, driving the market up early in the session. And then look at this. This is what drives me nuts even more, folks, right? If we go to this period here, here is where all of a sudden the PCE data has been released. These tails right here, this tells you that buyers from retail are buying the market on that PCE data, but the markets aren't going up. Instead, you get a push and then a reversal, push, reversal, push, reversal. Essentially, what's going on here, folks, is that you have institutional money that likely bought down here. They are unloading with a vengeance right up here. All right. Essentially, they're taking profits, dumping in to the liquidity boost that comes with the data being released. All right. And what ends up happening to the markets? It ends up selling all the way back down here. Amazing, folks. So all those retail players that thought, hey, let's buy this PCE data, it essentially assures a rate cut next week from the Federal Reserve. All of that, they're all underwater. Whether they got out by end of day, I don't know. But I do know the institutional dumping into that was clear as a bell. Now, listen, I talk about this stuff because I want you guys to understand there's always been insider information that's leaked out, right? But it's much more blatant now. It is just right. Like, they don't even try to hide it anymore. It's just right there for us all to witness via the massive buying that's going in. And by the way, I've covered this literally before the government shut down when we were getting data prior, jobs reports, CPI data. We saw this happening over and over again. And it's just a get-rich-quick scheme, essentially. All right? It is what it is, right? But I just want you guys to know about it. Verified Investing's got your back with data and analysis. No BS. All right. So back to the charts we go. Let's flip back to the S&P and get into some technical analysis. Flipping to the daily chart, we can see, again, markets early in the day were up and then came back in. All in all, this is where we closed last Friday. So we did gain slightly on the week, but it was very quiet. The one thing that catches my eye here, number one, this was the last gap that has yet to or hadn't been filled on the S&P. We filled it today. Now, listen, it doesn't mean we can't go above this level, but if we do go above this level, then you're basically at about a 1.3% move until we slam into resistance at the high end of this parallel. Now, this parallel is one that I've talked to you guys about nonstop for the last month or so. It's what told me the market's we're going to sell off when we hit it last time. And until proven otherwise, I have to assume the markets have limited upside here and are looking to sell off. Now, in addition, I do think next week will be a down week in the markets. Now, how much down? It's up in the air, but it could be significant. Essentially, why? Well, number one, we're getting topping tails in some major names out there. Walmart, for instance, put in a topping tail. Carvana, not a big name, but that put in a topping tail today. A lot of these factors or these plays that ran up significantly, they've all either hit resistance, filled major gaps like the S&P, or have put in topping tails. And those are all bearish reversal signals in the charts, okay? So we also have this obviously up here. We know we filled the gap on the S&P. If we look at the QQQ here, this is an interesting one, right? And this is some lines from earlier today. But look at this, guys. Look at how early today, let's extend this out. Early today, the QQQ was above this resistance line. Remember, this was a resistance line. Let me get rid of all this junk over here. Drives me nuts when it's not super clear for you guys. I like clarity on charts and simple charts. I hate when there's too much nonsense. But you have the parallel here, which was support, 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 right? We broke down, we retraced, and look at how today we tried to get above this level and couldn't. Is that foretelling a fall next week? I think it is. All right. Again, the markets had every opportunity to stay above that. Institutional money made sure they did not stay above that, and it closed below. That's a signal to me. In addition, this is really big, guys. Apple, I've been warning you, Apple is a strong short early this week when it tagged this upper level at 285. Look at this, guys. Not only is this an epic parallel that has marked the COVID low, the bear market of 2022 low, April 2025 liberation tariff sell-off collapse low, the bull market high of 2021, and the December 2024 pivot high before this big drop. We went to it this week. More importantly, this candle, that's a topping tail. So not only did you tag the high end of the parallel, but you got a weekly topping tail on Apple. That is a huge signal, right? So daily topping tails are important. Weekly topping tails tell you you're likely at a more major top. All right, think about it like this. If you have a topping tail on the 10-minute chart, it tells you intraday you've got a top, most likely. Okay, once you go to a bigger time frame, it tells you the bigger time frame is topping. So a daily topping tail is good. A weekly is better. A monthly is even more powerful. Just keep that in mind. The bigger the time frame, the more significant, because it covers a bigger period of the market, for the coming market, I should say. All right, next up, let's take a look here. Couple other charts. Walmart, guys, again, surged up, reversed, little topping tail there, bearish reversal signal. The semiconductors, look at this, guys. Today, the semis were strong and they closed only fractionally green. The last gap on the SMH was also filled today right here. Look at this right here, guys. Here's your gap, and we gapped down here, and we filled it today right there. All right, so that's significant in terms of the charts. In addition, we remember this weekly 200 moving average. So I just flipped to the weekly chart, right? So I went to the weekly, I added in my weekly 200 moving average, and we know that we still have had an extension move of 102%. We have not taken that out. We've had a great bounce, but also remember, over here, we had a 202% extension above the 200 moving average. We fell 3 weeks in a row, and then we bounced 1, 2, pause before downside, right? Here we had 3 weeks down, 1, 2 bounce. So again, now that we've filled the gap, does this tell us next week we're going to have some downside? We'll see. Other charts that are catching my eye. NVIDIA. I talked about it this morning in my trading game plan. This is a classic bearish pattern formation. All right, again, bear flag, you have a down move like this, and then in the lower area, you start to chop sideways to up, creating this kind of consolidation, which usually resolves itself to the downside. That's exactly what's happening here, and you've broken the parallel. So it looks like NVIDIA, to me, is going to head lower. Now, the question is it into year end, or do we see enough institutional kind of hedge fund buying and window dressing late in the year, like the last week or two of the year with Christmas and New Year's, they can keep it afloat? I don't know, but it does tell me that whether it's later in December or in January, NVIDIA's got another leg down. All right, that's the high probability scenario at least. Okay, what else do we have here, guys? The VIX is catching my eye. Look at the drop on the VIX, guys. The VIX is the fear index. We're now in complacency zone. If we look back here, what do we see? Anytime we're in this lower zone, right? What happens? We get pops. We get pops. So again, look at how fast we've fallen. In fact, this fall here, this is even more downside, right? Here we topped out right there. We came down to about 16, then popped up to 30, near 30. We're now at 15 on the VIX. And so the VIX, again, is telling me there's a lot of complacency into year end, meaning investors are assuming that everything is fine. There's nothing to worry about. The Fed will save the day. Nothing else can go wrong. And when people think nothing can go wrong, it means any small bump can be a surprise that no one's expecting. And that creates volatility, AKA fear. Okay, back to the charts we go. A couple other charts. Here we have Netflix buying WBD, Warner Brothers Discovery. That has broken a major long-term trend line. Look at that long-term trend line breakdown today, closing right around $100. Amazing. This was trading at 134. So that is a big percentage drop. I still think there's more downside on this. I think, again, you'll have a little bit of a level around 93, but really, I think you're heading down to about 82.80 here. Major technical support there. That should be a good bounce level. Whether or not that heads down into year end, we'll have to see. Could be some window undressing in Netflix, though, as Netflix has not been a great performer for the year. I think it's up for the year, but barely up. Here's right at the beginning of the year, we were trading around 90. So it's up about 10% for the year. But again, in all fairness, you compare that to almost any other tech stock, and that's not really a good performance for Netflix or any stock out there. All right, Palantir is now a short according to my data here. We had a classic trend line. We broke, we've retraced. You should see rejection off this. Now let's flip over to some of the bigger stuff here. Gold. Gold today, guys, early in the day, it was up. It came back in. That's okay because you're still holding the bullish consolidation pattern. Okay. Now, again, we could continue next week to chop sideways. What you don't want to see, you don't want to see a break with confirmation basically below 4,100. If that happens, then that's really bad. Anything above here is fine. That's still bullish, right? So again, it's just a matter of watching the chart, letting the chart tell us what is the appropriate move. Silver today had a good bounce, made a new all-time high, but then closed back below. That's okay. Same thing. Maybe we're just consolidating. I'm still looking for a move here to see if we can tag this upper parallel. So far, that has not happened. Now, I've been hyping up energy, right? I've been talking to you guys based on pure technical analysis on energy, right? I've said, guys, I'm long oil and I'm looking to short natural gas. Okay. Well, guess what? Nat gas, the level I've talked about for like a month, saying, oh, I can't wait, patience for the level on natural gas. Boom. Today it hit there, already in the money on that short. So if you're following me in smart money, commodities and miners, congrats on that trade there. All right. But oil, I've been long for the last week and a half or so. It looks like it's breaking out. It closed above that level. Let's jump over to the charts and take a look. Take a look here, guys. Here's that cup and handle I've been talking about for some time. I picked it up right down here, talking about how we were right on the support line with minimal downside risk to the low of the cup portion. And look at that move. It looks like oil is breaking out. All right, where's oil going to go? First resistance should be around $62 a barrel. If it breaks through there, we're talking 66 or so, 65 to $66 a barrel. And then look at natural gas, guys. This is so cool, guys. I love when charts come to fruition to the levels precisely. And again, what I love about this is the patience that I've shown you. Whether you've been following my game plans or not, I've talked about this level on nat gas, saying, guys, I just have to wait for that level. If it hits, I'll take a short. If not, so be it. That's the discipline that can make you money as a trader and an investor. And lo and behold, here's your look. Look at this level right here. Low of this, bounced way up, came back in. Bounced big again, hit again, bounced again, broke. We know this is a retrace to the scene of the crime. I mean, look at that. It goes right into that level right there and pulls back. So again, listen, there's no guarantees. This could go up on Monday for all we know. But ultimately, again, guys, that was a great entry right there. I think we're going to pull back more. Again, I picked up KOLD, which is a double short ETF on nat gas. Again, we're in the money pretty nicely already because, again, that's a big move percentage-wise from 530 and change down to close at 520. Not too shabby on a percentage basis. We'll see how that goes next week. Lastly, Bitcoin, let's take a look. Bitcoin, guys, it did pull back today, but again, to me, this is staying within this bear flag pattern. Even though I call it a bear flag, it means that you could still trade up and make short-term higher highs. Because again, that's what bear flags do. They digest the bigger down move in the chart as, again, buyers generally are buying the dip. But again, you're not getting the big pop because there's still sellers there. It's kind of working its energy back for that next leg lower. So yeah, I'm still long Bitcoin at this lower level here. But again, I'm not looking for a massive move. Max upside would be about 100,000 on Bitcoin. What a week, but don't worry, there's more. And I don't mean today in my weekly wrap up here. I mean next week. Next week, we have the Fed decision on Wednesday, guys. In addition, we are going to do the live day trading room free in the afternoon for all of you. If you want to tune in, it's free. You can watch it on our homepage or on YouTube. But we will be doing, all my traders and I will be trading that. We'll be analyzing the charts. We'll be rocking and rolling next Wednesday afternoon, starting around 1:30, 1:45. The numbers come out, or the Fed decisions at 2:30 is the press conference. This should be epic, folks. And again, it could be major market moving and also some great trades in there. You guys go have a wonderful weekend. As always, folks, I appreciate you. You guys spending your time with me and just devoting some time to learn. That's why I want to always bring a great knowledge to the plate here for you guys, because you're spending your time with me. That's the least I can do for you. Thank you from all of us here at Verified Investing. Thanks so much and have a great weekend. Take care.